On January 23, 2025, President Trump signed an executive order creating a strategic Bitcoin reserve. Wall Street celebrated. Bitcoin hit $100,000. Everyone thought this was about crypto innovation. They were completely wrong. This was a declaration of economic war against China. Within 72 hours, China's highest decision-making body, the Politburo Standing Committee, convened an emergency meeting. 7 men who control 1.4 billion people in the world's second-largest economy did not meet to discuss trade or Taiwan or technology. They met to discuss Bitcoin, because Trump's executive order wasn't just domestic policy. It was an act of economic aggression. And China is preparing to respond with action that will shock the world. They're mobilizing resources to compete for control of Bitcoin at the nation-state level. This competition between the United States and China for digital asset dominance will reshape the global financial system. It will determine which country controls the future of money. It's already begun. Why China sees this as war? For 75 years, America has dominated global finance through control of the dollar. 70% of international trade is settled in dollars. 60% of global central bank reserves are held in dollars. This gives America extraordinary power. If you want to trade oil, you need dollars. If you want to access global banking, you need dollars. And if America doesn't like you, they can cut you off from the dollar system entirely. America has used this weapon repeatedly. Sanctions on Russia, Iran, Venezuela, freezing Afghanistan's dollar reserves, cutting countries off from SWIFT, the global payment system. Every time America does this, the rest of the world realizes they're vulnerable. Their wealth, their reserves, their ability to trade can be taken away if they displease Washington. So they've been looking for alternatives. For decades, China has tried to internationalize the yuan, to make it a reserve currency that competes with the dollar. They've created yuan swap lines with other countries. They've tried to settle oil trades in yuan, but it hasn't worked. The yuan is still only 2.7% of global reserves. Why? Because nobody trusts China. The Communist Party controls the yuan completely. They manipulate its value. They restrict capital flows. They can devalue it overnight. So the world still uses dollars, despite hating American dominance. Until Bitcoin. Bitcoin is different. It's stateless, decentralized, fixed supply. No single entity controls it. For China, this represented a potential path to escape dollar hegemony without needing the world to trust Chinese institutions. If global trade could be settled in Bitcoin instead of dollars, America loses its weapon. But they also saw a danger. Because if Bitcoin becomes a major global reserve asset, whoever controls the most Bitcoin has enormous influence. Not absolute control like with the dollar, but significant influence. And if America gets there first, if America accumulates 1 million Bitcoin before China acts, then Bitcoin just becomes another dollar, an asset America can weaponize. This is what Trump's executive order represents to China. America declaring its intention to dominate Bitcoin, to accumulate massive reserves before anyone else, to turn Bitcoin into an American strategic asset rather than a neutral alternative. And China cannot allow this, because if America succeeds, China loses both the dollar system they were trying to escape and the Bitcoin alternative they hoped would replace it. They'd be locked into American financial dominance for another generation. So Trump's executive order forced China's hand. They have to respond. They have to compete for Bitcoin accumulation. This is an arms race, and it started the moment Trump signed that order. China's forefront response. First, Bitcoin mining mobilization. In 2021, China banned Bitcoin mining. They claimed it was about energy consumption and carbon neutrality. It was the public story. The real reason was control. China's government couldn't control mining that was happening inside China by private citizens, so they banned it. Miners fled to Kazakhstan, the United States, Russia. China's share of global hash rate went from 75% to 0 in 6 months. But here's what most people don't know. The ban was never total. State-controlled mining continued. Government-linked entities, state-owned power companies, military-adjacent technology firms, they continued mining Bitcoin in secured locations. Inner Mongolia, Xinjiang, Sichuan, during the rainy season, when hydropower is abundant. The hash rate wasn't attributed to China because it was routed through VPNs and foreign registered pools, but the mining was happening, and the Bitcoin was accumulating in government-controlled wallets. Estimates suggest China has been mining between 50,000 and 150,000 Bitcoin since the ban held in wallets controlled by the People's Liberation Army Strategic Support Force. This is the unit responsible for cyber warfare and information operations. They control China's Bitcoin reserves the way the U.S. Treasury controls gold reserves. Trump's executive order changed the equation. Within 1 week of the order, China quietly lifted restrictions on state-controlled Bitcoin mining. They didn't announce it. There was no official policy change. But provincial governments in Inner Mongolia, Xinjiang, and Qinghai received directives. State-owned power companies can now allocate surplus electricity to Bitcoin mining facilities. Government-approved entities can operate mining farms without penalty. The Communist Party is mobilizing China's massive power generation capacity to mine Bitcoin at scale. China generates more electricity than any country in history, 28,000 terawatt-hours per year, more than the United States and India combined. Much of this is coal power in remote regions where electricity cannot be easily transmitted to cities. It's essentially wasted. It can power Bitcoin miners. China is now redirecting this power to mining. They're building mining farms in Xinjiang, Inner Mongolia, and Western provinces. Government funding, no regulatory barriers. Unlimited power at cost. They're targeting 20 to 30% of global hash rate by the end of 2026. If they achieve that, they'll be mining approximately 140 Bitcoin per day, 51,000 Bitcoin per year. Within 3 years, China could have an additional 150,000 Bitcoin from mining alone. Combined with existing holdings, China could control 250,000 to 300,000 Bitcoin by 2028. This is a direct response to Trump's 1 million Bitcoin target. China can't match 1 million, but they can accumulate enough to prevent American monopoly. Second, open market purchases. China holds $3.2 trillion in foreign exchange reserves, the largest in the world. Most of this is U.S. Treasury bonds and dollars. Assets they want to diversify away from. For years, they've been slowly reducing Treasury holdings, from $1.3 trillion in 2013 to $731 billion today. They've been buying gold. They've added over 1,000 tons in the last 3 years. Official reserves are now 2,350 tons. But gold is physical. It's heavy. It's hard to move. Bitcoin is digital, borderless, infinitely portable. Perfect for a country that needs to diversify reserves without American approval. After Trump's executive order, Chinese state-controlled investment entities began accumulating Bitcoin through over-the-counter desks, not exchanges. OTC desks, where large buyers can acquire Bitcoin without moving the market price. They're buying through intermediaries in Singapore, Hong Kong, and Switzerland. Shell companies, sovereign wealth fund proxies, state-owned enterprises operating through foreign subsidiaries. Estimates suggest China has purchased 50,000 to 80,000 Bitcoin through OTC markets since late January 2025, at an average price around $90,000 to $100,000. That's $5 to $8 billion. A rounding error in China's $3.2 trillion in reserves, but significant in Bitcoin terms. And the purchases are accelerating. Intelligence sources suggest China has authorized up to $30 billion for Bitcoin acquisition through state entities over the next 3 years. If executed, that could be 250,000 to 300,000 Bitcoin depending on price. Combined with mining, China could control 500,000 Bitcoin or more by 2028. That's half of America's 1 million target, enough to ensure China has a seat at the table in any future Bitcoin-based monetary order. Third, the Bitcoin-backed digital Yuan. China has been developing a central bank digital currency, the digital Yuan or ECNY, since 2014. They've conducted the world's largest CBDC pilot. Over 260 million people have used digital Yuan wallets. Over $100 billion in transactions. The goal was to create a programmable, government-controlled digital currency that can compete with the dollar in international trade. But the digital Yuan had a problem. Nobody outside China wanted to use it because it's controlled by the Communist Party. They can freeze accounts and track every transaction. devalue it at will. It's surveillance money. So international adoption was near zero. Trump's Bitcoin order gave China a new strategy. They're now positioning the digital yuan as Bitcoin-backed. Not fully backed, but partially backed with Bitcoin reserves. The messaging is subtle, but clear. The digital yuan will be redeemable for Bitcoin at official exchange rates set by the People's Bank of China. This makes the digital yuan more attractive than pure fiat while maintaining government control. China can issue digital yuan knowing it's backed by an appreciating asset Bitcoin that has no counterparty risk. And they can offer other countries the ability to trade in digital yuan with the promise that it can be converted to Bitcoin if needed. This is a direct challenge to the dollar, because the dollar is backed by nothing except U.S. military power and economic dominance. If China offers a Bitcoin-backed digital yuan for international trade, some countries will be very interested. Russia, Iran, Venezuela, Pakistan, parts of Africa, parts of Southeast Asia, countries that either hate America or are hedging against American dominance. They'll start accepting digital yuan for trade. And slowly, the share of global trade settled in dollars shrinks. China's currency war strategy isn't to replace the dollar overnight. It's to erode dollar dominance incrementally. Every trade settled in digital yuan is a trade not settled in dollars. Over 10 to 20 years, this shifts the balance. And Bitcoin backing makes it possible. Fourth, BRICS coordination. BRICS is an alliance of Brazil, Russia, India, China, and South Africa, recently expanded to include Iran, Egypt, Ethiopia, and the United Arab Emirates. These countries represent 45% of global population and 35% of global GDP. They've been discussing alternatives to the dollar for years, but coordination has been difficult because they don't trust each other. Russia doesn't trust China. India doesn't trust China. Brazil doesn't trust anyone. But Trump's Bitcoin executive order created alignment because now they all see a common threat: America weaponizing Bitcoin the same way it weaponized the dollar. China is now proposing a BRICS Bitcoin reserve, a collective pool where each BRICS nation contributes Bitcoin to a shared reserve managed by a multilateral institution. The proposal is still being negotiated, but the structure is taking shape. Each BRICS member contributes Bitcoin based on GDP. China contributes 40%, India 15%, Russia 10%, Brazil and others the remainder. Total target 500,000 to 1 million Bitcoin collectively. This reserve would back BRICS trade. When Brazil sells soybeans to China, payment is settled in BRICS currency units backed by Bitcoin. No dollars needed, no SWIFT required, no American control. This is the nightmare scenario for American dominance. A parallel financial system backed by hard assets, Bitcoin and gold, that allows half the world to trade without dollars. It won't happen overnight. It'll take 5 to 10 years to build. But Trump's executive order made it inevitable. China is leading this effort not because they're altruistic, but because a multilateral Bitcoin-backed system serves China's interests better than American monopoly. And it serves everyone else's interests too. That's how coalitions form. Shared threat creates alignment. This has happened before 1944, the end of World War II. Allied powers meet at Bretton Woods, New Hampshire, to design the post-war monetary system. Two competing visions emerge. British economist John Maynard Keynes proposed a neutral international currency called the Bancor. It would be issued by a global central bank, backed by a basket of commodities including gold. Every nation would settle trade in Bancor. No single country would control it. It would be truly international, neutral, fair. America's plan was simpler. The dollar becomes the world's reserve currency. Dollars are backed by gold at $35 per ounce. Every other currency is pegged to the dollar. America won. The dollar became the global reserve currency. For 27 years, this worked. But then America started cheating. The Vietnam War cost too much. The Great Society programs cost too much. America was printing more dollars than it had gold to back. By 1971, foreign governments noticed. France demanded gold for its dollars. Britain demanded gold. Switzerland, Germany, Japan all demanding gold. On August 15, 1971, President Nixon closed the gold window. He suspended dollar convertibility to gold. Temporarily, he claimed. It's still suspended 54 years later. The dollar became pure fiat, backed by nothing except the full faith and credit of the United States government. And this worked for another 50 years because America remained the dominant military and economic power. But that dominance is eroding, and the world is looking for alternatives again. Bitcoin is the modern Bancor, a neutral monetary asset that no single country controls. China understands this. They learned from Bretton Woods. They watched America dominate for 80 years because they controlled the monetary system. China doesn't want to replace American dominance with Chinese dominance. They know the world won't accept that. They want a multipolar system where Bitcoin is the neutral reserve and the Yuan, dollar, euro, and others compete on merit. This is why China is pushing BRICS, Bitcoin reserves, and Bitcoin-backed digital Yuan, rather than trying to make the Yuan the sole reserve currency. They learned from history. Unilateral dominance creates enemies. Multilateral systems create stability. China thinks long-term. They're playing the 100-year game. America, with Trump's executive order, is playing the 4-year game. 2025, the opening moves. Trump signs the Bitcoin executive order in January. China responds with mining mobilization and OTC purchases. Russia announces it will accept Bitcoin for oil and gas exports. Iran starts mining Bitcoin with excess natural gas. Saudi Arabia, hedging between America and China, quietly begins accumulating Bitcoin through sovereign wealth funds. India announces its own Bitcoin reserve separate from BRICS. Prices are volatile. Bitcoin ranges between $80,000 and $150,000 by year-end. America holds approximately 150,000 Bitcoin through seizures and purchases. China holds approximately 150,000 through mining and purchases. Russia holds approximately 50,000. BRICS collectively holds 300,000. The race is tied, but the direction is clear. Nation-states are accumulating. 2026, the acceleration. America ramps up acquisition. Treasury authorizes open market purchases. The Fed creates a Bitcoin custody facility. America buys 250,000 more Bitcoin. Total U.S. holdings, 400,000 Bitcoin. China responds by increasing mining hash rate to 25% of global total. They purchase another 150,000 Bitcoin. Total China holdings, 300,000 Bitcoin. The BRICS Bitcoin reserve is formalized. Members contribute. Total BRICS reserve, 600,000 Bitcoin, of which China controls 40%. Russia leverages its energy dominance. They announce Bitcoin mining facilities powered by natural gas that would otherwise be flared. Mine another 50,000 Bitcoin. Iran does the same 25,000 Bitcoin. The Middle East starts accepting Bitcoin for oil. First, in small percentages. 5% of payment in Bitcoin, then 10%. By year-end 2026, 15% of global oil trade accepts Bitcoin as partial payment. This is the beginning of the petro-Bitcoin system, and it directly undermines the petrodollar system that has sustained American dominance since the 1970s. 2027, the crisis year. Bitcoin price has surged to $300,000 due to nation-state buying. Retail investors and institutions are priced out. Volatility is extreme. America announces its holdings have reached 650,000 Bitcoin, or 2/3 of the way to the 1 million target. But the deficit is exploding. The trade war with China has reduced GDP growth. Tax revenues are falling. The government is borrowing $5 trillion per year. Bond markets are unstable. The Fed is forced to print money to buy treasuries. The dollar is weakening. China sees an opportunity. They announced that the digital yuan is now officially backed by Bitcoin reserves. 1 digital yuan is redeemable for a specific amount of Bitcoin at official rates. This is the monetary nuclear option, because it positions the digital yuan as harder money than the dollar. Countries holding digital yuan reserves now have indirect Bitcoin exposure without needing to custody Bitcoin themselves. Adoption accelerates. Russia, Iran, Venezuela, Pakistan, large parts of Africa switch to digital yuan for trade with China. BRICS nations begin settling BRICS trade exclusively in BRICS currency units backed by the Bitcoin reserve. Approximately 20% of global trade is now conducted outside the dollar system. The dollar share of global reserves falls from 58% to 50%. For the first time in 75 years, the dollar is no longer the majority reserve asset. This is the inflection point, the moment when dollar dominance becomes dollar participation. America is still the largest economy. The dollar is still the most used currency, but it's no longer unchallengeable. The world is genuinely multipolar, and Bitcoin is the neutral asset at the center. 2028 and beyond, the new order. Bitcoin stabilizes around $500,000 to $1 million per coin. Nation-states hold collectively over 3 million Bitcoin, about 15% of all Bitcoin that will ever exist. The rest is held by early adopters, corporations, and retail investors who never sold. The global monetary system is bifurcated. The Western system, dollar-based U.S. treasuries, NATO allies, Japan, South Korea, Australia, traditional American sphere. The Eastern system, BRICS-based, digital Yuan, with Bitcoin backing, BRICS currency units, sphere, plus Russia, Iran, and swing states. Both systems use Bitcoin as a reserve asset, but governance is separate. Neither side trusts the other. So Bitcoin serves as the neutral settlement layer. When West trades with East, final settlement is in Bitcoin, not dollars, not Yuan. Bitcoin. This is the new Bretton Woods, except instead of the dollar being the sole reserve, Bitcoin is the neutral reserve, and fiat currencies compete for secondary use. It's messy, it's volatile, but it's more balanced than unipolar American dominance. And it's what China wanted all along, not Chinese dominance, but a system where China is an equal player with America. The currency war that began with Trump's executive order in 2025 ends not with American victory or Chinese victory, but with stalemate. A multipolar monetary order where Bitcoin is the ultimate reserve. Winners and losers. Winners. China. They achieved their goal, escaped unipolar dollar dominance, created a multilateral system where they have equal influence. The yuan is now a legitimate international currency, Bitcoin-backed, trusted. They didn't replace America, but they don't have to. Parity is victory. Russia. They leveraged energy dominance into Bitcoin wealth. Their reserves are no longer vulnerable to Western sanctions. You can trade with China, Iran, and others using Bitcoin-backed systems. Western sanctions become irrelevant. BRICS nations, Brazil, India, South Africa, and others, gained monetary sovereignty. They're no longer forced to use dollars or subject to American financial pressure. They trade in their own currencies backed by BRICS Bitcoin reserves. Early Bitcoin holders, the people who bought Bitcoin at $1,000, $10,000, $50,000, and held through everything. When Bitcoin hits $500,000 to $1 million, they're generationally wealthy. They own the neutral reserve asset that nation-states are fighting over. Gold holders, who also held Bitcoin, they diversified into both hard assets. Gold goes to $10,000 per ounce as central banks keep buying. Bitcoin goes to $1 million. They preserved wealth through the currency transition. Losers. The United States government. They lost absolute dominance. The dollar is still important, but it's no longer the unquestioned king. American ability to use sanctions as a weapon is diminished. They can still sanction within the Western system, but the Eastern system ignores them. This is a massive geopolitical loss. Dollar holders. The dollar lost 30 to 40% of its purchasing power during the transition. Inflation from money printing. Devaluation as reserve status eroded. People holding cash and dollar-denominated bonds got destroyed. European Union, they hedged poorly. Tried to create a digital euro, but nobody wanted it. Ended up caught between American and Chinese systems. The euro remains a regional currency. Never achieved global status. Bitcoin holders who sold early, the people who sold Bitcoin at $50,000 thinking they made good gains, then watched it go to $1 million. They missed the greatest wealth transfer in history. They had the asset. They just didn't hold it. Traditional investors, stocks and bonds performed poorly during the currency transition. High inflation, geopolitical uncertainty, recession in 2027. The S&P went nowhere for 5 years. Real returns were deeply negative. What you must do. First, understand that this currency war is happening whether you participate or not. America and China are competing for Bitcoin dominance. Your personal Bitcoin holdings are irrelevant to nation-states, but your personal wealth is affected by the outcome. Second, hold Bitcoin. Not because America or China will win, but because both sides are accumulating. When nation-states compete to acquire an asset, the price goes up. Basic supply and demand. The run to $1 million per Bitcoin isn't speculation. It's the mathematical result of the largest entities in human history competing for a fixed supply asset. Third, don't hold all your Bitcoin on exchanges. Nation-states will pressure exchanges. America will demand KYC data. China will demand cooperation from Asian exchanges. Your exchange-held Bitcoin is vulnerable to government action. Move it to self-custody, multi-signature, cold storage. If you control the keys, neither America nor China can confiscate it during the currency war. Fourth, diversify jurisdictions. If you're American, consider holding some Bitcoin through foreign entities. Singapore, Switzerland, jurisdictions that won't automatically cooperate with U.S. government demands. If you're Chinese, get Bitcoin outside China. Don't let your government monopolize access. Fifth, hold gold as a hedge. Bitcoin is the focal point of the currency war, but gold is the traditional reserve asset. Central banks are accumulating both. If Bitcoin faces technical issues or regulatory attacks, gold is the backup. 10 to 20% of your hard asset allocation should be gold. Sixth, expect volatility. Currency wars are chaotic. Bitcoin will swing wildly. $100,000 to $200,000. Back to $120,000. Up to $350,000. Down to $200,000. These swings will be driven by nation-state buying, regulatory announcements, and geopolitical events. Don't panic. Don't try to trade it. Just hold. The long-term trend is up because the supply is fixed and demand from nation-states is structural, not speculative. Seventh, watch the signals. When China announces digital Yuan Bitcoin backing, that's a major escalation. When BRICS formalizes Bitcoin reserves, that's a major escalation. When oil-producing nations start accepting Bitcoin for energy, that's the petro-Bitcoin moment. Each of these signals tells you the currency war is progressing. Each one pushes Bitcoin prices higher. Trump's Bitcoin executive order wasn't just domestic policy. It was a declaration of economic war. China understood this immediately. They're responding with mining mobilization, open market purchases, digital yuan, Bitcoin backing, and BRICS coordination. This is the currency war. America versus China for dominance of the future monetary system. The winner isn't determined yet, but the conflict is inevitable. Bitcoin is the battlefield. And everyone who holds Bitcoin is participating whether they realize it or not. The timeline is clear. 2025. Opening moves. 2026. Acceleration. 2027. Crisis and inflection point. 2028. New monetary order. The price target is $500,000 to $1 million per Bitcoin by 2028. Not because of retail adoption or ETF flows, because nation-states are competing for a finite asset. The supply cannot increase. The demand is structural and enormous. The math is simple. If you understand what's happening, you position now. You accumulate Bitcoin while it's still below $200,000. You move it to self-custody. You diversify jurisdictions. You hold through volatility because the currency war has begun. It won't end until one system dominates or both systems reach equilibrium. Either way, Bitcoin wins. The only question is whether you'll hold it long enough to benefit. When this war ends, when the new monetary order is established, you'll either hold the asset both sides were fighting for, or you'll hold the currency the loser printed. The choice is yours.